Hello and a warm welcome. You joined us here on Market Fatafat right here on ET Now. With me is Ashesha. I'm Ashesha Advaryu. With me is Ravinder, and you're joining us here from our ET Now Suzlon studio. And this is a show where we discuss all the stocks that are in focus today, either on the back of news or on the back of fundamentals. All right, let's get going then. And first up, let's take a look at what the market is doing at this point in time and what a solid recovery it has been for the Indian equity markets. We did recover from the lowest point of the day. We then went into the green and we've slipped into the red a little bit at about that 24,190 mark. We've tanked below that 24,200 mark. But despite that, it has been a stellar recovery for Indian equity markets. Nifty bank chart should also come up for you on your screens because we have seen solid recovery from the lowest point of the day over here as well. 57,954 thereabouts is where the Nifty bank is now trading. In terms of individual stocks that are in focus today, a whole host of counters, especially from the broader markets that continue to do exceptionally well in trade today. But let's put the spotlight on the IT index because that has shown significant rebound from the lowest point of the day, nearly 4% higher as we speak. We have several stocks from the IT index which continue to remain in focus. TCS up 6%, HCL Tech, Mahindra, Infosys, LTI, Mindtree, all of them gaining in excess of 3.5% in trade today. But let's get started then, and this is a show where we discuss all individual stocks that are in focus today. On technicals, we are now joined by Ajit Nayak of HDFC Securities and Rabinder from our research desk. Gentlemen, thank you for taking your time out and joining us here on ET Now. But Rabinder, let me come to you first. Just Dial, that's the stock on your radar this afternoon, and the stock is locked in upper circuit of 20%.
Well, as Just Dial is in focus after reporting its Q1 FY27 earnings, and the second reason is on the back of management rejig. Firstly, let's talk about earnings, where in Q1 of FY27, company's revenue grew by 6.6% on a quarter-on-quarter basis, and net profit also saw a good expansion of 66% on a sequential basis, and it was the fastest Q-on-Q listing growth in a decade, excluding the post-COVID recovery period, and active listing rose to 2.7% on a sequential basis to 5.61 crore, which indicates continued expansion of the platform database. And second reason is on the back of management rejig. Board has appointed Mr. Dinkar as a CEO, and apart from this, board has also appointed Mr. Dinesh Taluja as a CFO of the company, and Mr. Dinkar was a former Flipkart executive and spent nearly 15 years at Bain & Company with over 2 decades of experience, and he has built, transformed and scaled business across digital commerce, retail and technology with deep expertise in P&L management, enterprise transformation and long-term business strategy. So back of these two main reason, earnings of Q1 FY27 and management rejig, Just Dial is in focus, and the stock is up 20% with upper circuit.
Well, yes, so Just Dial in focus on the back of management rejig and earnings. But shifting focus then, Ajit, you've picked up Ceylon Engineering or Exploration for us, and the new name is Antipolis Solar Energy. What will your technical view be on this counter?
So if you look at the chart from a weekly and daily point of view, the chart is in solid uptrend. It's making higher top and higher bottom, and now on a daily time frame, it is consolidating from last couple of sessions. So tight range with the low volume has been dry up. So this indicates that there is accumulation going on. So once it crosses 855 level on a higher side, so I expect the stock to again continue its upward momentum, and it may soon test 1,100 or 1,050 on a higher level. So that is the next approximate resistance as for the Fibonacci retracement I'm looking for.
Okay, so that's the view coming in on Ceylon Exploration. But let's shift focus to Avenue Supermarts then, and that counter has reported its numbers. Although the numbers look in line on the revenue front, the company has reported a growth of about 15% on a year-on-year basis, but the growth clearly has slowed down. So same time last year, the company had reported a strong 19% growth, and that has slowed down to 15%, which is a concern for the street. And the like-for-like growth has also seen a decline this time around. It has grown, but the pace of growth has declined this time around, and that is exactly the reason the stock is down nearly 2% in today's trading session. Other than that, we also have a whole host of brokerage reports. Axis Capital has maintained its ad rating on the stock, but the target price has now been cut to 4650. Bernstein has maintained outperform rating, 5,000 is their target price, and Jefferies 4,500 is the target price with hold rating on this counter. But the fact that the pace of growth, especially like-for-like growth, has slowed down is a concern for the street, and that is the reason the stock is sitting with a cut of nearly 2% in today's trading session. So that's Avenue Supermarts for you. But Ajit, you have also picked up Lloyd's Engineering for you. Tell us, what do charts indicate for this counter?
This chart too is very in a uptrend, and if we compare the relative strength with the market, especially this chart has a greater relative strength. The RS rating is quite high, and it is trying to break a narrow range consolidation above 92. So we need a solid close above 92. Again, after a tight consolidation, we expect the market, this particular stock, to move ahead and test at least 100, 105 levels soon. But for that, we need a 92 closing level is very important. So we are looking for a close to for the stock to close above 92. And if you look also on a monthly time frame, it is near to the all-time high, and trading above its important resistance of 84. So that gives us a confidence that the stock can sooner or later test 105.
Okay, so 105, that's the target coming in for Lloyd's Engineering. But Rabinder, you've also picked up Fino Payments Bank for us. Tell us more about this and why the stock is soaring in trade today.
Well, yes, Fino Payments Bank is in focus after reporting its June month business update, and liability franchisee continue to witness a healthy growth in the June 2026, and new customer acquisition remained robust during the month. And apart from this, average total deposit also increased by 11% on a yearly basis, reflecting the strong deposit mobilization, and digital engagement remained healthy, with the digital active customer rising to 22% on a yearly basis to approximately 64.7 lakh, and loan referred business continue to scale up sharply, supporting the company's proposed small finance bank transition. So back of this strong update for the June 2026, Fino Payments Bank is in focus, and the stock is up 9%.
Okay, so that's Fino Payments Bank for you. The stock is up nearly 10% as we speak. But Ajit, you've picked up Satin Credit Care for us. Do you see more upside in this counter in the short term?
Yes, if you look at the stock on a weekly basis, it has formed a deep cup pattern, and we have seen the successful breakout of the pattern about 220 odd level, and now it is currently sustaining above that level. After a minor consolidation and a dip, the stock is again resuming its uptrend. So the stock is likely to test 300 level, but for that it should not go and sustain below 255. So important support needs to be watched for that 255 level should not get invalidated. Otherwise, the stock has full potential to test 300 also.
Okay, so 300, that's the target price coming in for Satin Credit Care. But let's also shift focus to Swiggy then. The stock is in focus because FSSAI has issued 9 notices to Swiggy Instamart. And this is because complaints allege unsafe food sold via Swiggy Instamart. Consumer complaints are alleging violations under the FSSAI Act 2006, and Instamart, of course, has given a clarification where they are saying that they are reviewing the flagged listings by FSSAI, and they are in touch with the authorities to resolve these problems very soon. That's the clarification that has come in from the company, but despite that, it's a negative because it concerns food safety, and that is the reason the stock is sitting with a cut of nearly 2.5% in trade today. But Ajit, you've also picked up Triveni Engineering for us, and what do the charts for this counter suggest?
Triveni Engineering has broken out from the important zone of 437. After that, we have seen a strong rally and a small dip. This was considered as a healthy dip because the volumes are very low when the dip we saw on the charts. Now the stock has again surpassing the 478 level. So once it closes above this 478 level, the stock looks for the potential upside level of 525 to 530 odd level. The only thing is it should not invalidate the 430 level on a lower side. If it protects 430 level, then we will soon see 530 to 535 level.
Okay, so that's the view coming in on Triveni Engineering. But Rabinder, Puravankara, that counter has reported very strong operational data for the quarter gone by, and the stock is soaring in trade today, isn't it?
Well, it's on the back of strong Q1 FY27 operational update, Puravankara is in focus, and Q1 FY27, company pre-sales rise to 28% on a yearly basis at rupees 1439 crore, while collections also jumped nearly 40% on a yearly basis to 1199 crore, and the company also witnessed a sharp improvement in pricing, with average realization all increased to 18% on a yearly basis to rupees 10,589 per square feet, and company has handed over 745 homes covering 0.94 million square feet and has already achieved 13% in the first quarter as compared to FY27 guidance. And on the business front development, Puravankara also announced 4 new land acquisition with a development potential of 4.23 million square feet and with an estimated GDV of rupees 5,200 crores. So back of the strong Q1 FY27 operational update, stock was up approximately 17% on a intraday basis.
Okay, so that's Puravankara for you. The stock is up 12% on the back of very strong operational updates. But Ajit, you've picked up Tatva Chintan Pharma for us. The stock is up 4.5% in trade today. 1389 is where the stock is currently trading. 1400 on the annual in the near term, is it? Or even more?
Yeah, we can even see 1,700 or 1,900 because the stock has formed double bottom pattern on a weekly time frame, and it's near to the breakout level of 1,410. So once it surpasses that 1,410, then it is open for a target of at least 1,700. Only the thing we have to keep in mind is it should not go and breach below 1,300. So if it protects that, then we can see a good uptrend in the stock because the stock has been consolidating for a couple of while for I think at least for 6 months or so. So breaking out with a relatively strength gives us an opportunity, and we can grab opportunity for at least 1,700 odd level.
Okay, so 1,700, that's the target price coming in for Tatva Chintan. That's a massive upside from the current market price. But shifting focus to the IT sector then, and HCL Tech will be reporting its numbers later today, where US dollar revenue is expected to come in at $3,632 million, which is a decline of nearly 1.5% on a sequential basis. EBIT margins are expected to come in at about 16.5% flat sequentially, and constant currency revenue growth meanwhile is expected to decline this time around anywhere between 0.5 to 1.5%. This is of course on account of seasonality and client-specific weakness that the company is expecting. IT services revenue meanwhile is expected to decline between 1 to 1.5%, and deal wins are expected to come in between 2 to 2.5 billion US dollars. So that's the broad expectation with respect to HCL Tech, which will be reporting its numbers post market hours today, but ahead of its results, in line with what most IT sector stocks are doing. That stock is also up nearly 4.5%. But Ajit, you've also picked up Balrampur Chini from the broader markets. What does the charts of this one suggest?
Uh, Balrampur Chini on a weekly chart, it's a very good pattern. Again, a double bottom kind of a pattern, and we are seeing a good upside momentum today. And if we close above 587 odd level or 86 level here also, so that gives us a good confidence that the chart has potential to test 720 level on the upside. The support level comes to around 545 level, so it should not go below 555 level. So if the chart gives a strong close above 586 level, then this stock has good potential. It is coming out of a good consolidation range.
Okay, so that's the view coming in on Balrampur Chini. But Anand Rathi Wealth, Ravinder Discounter reported its numbers on Thursday. But what do brokerage houses have to say on this?
Well, yes, Anand Rathi Wealth reported its number on Thursday, but brokerages has come out with the note after that, and Motilal Oswal has downgraded the stock to sell from the neutral and cut its target price to rupees 1,700 as compared to earlier target price rupees 1,800. They say that the while Q1 FY27 PAT was broadly in line with the street estimate excluding one-time items, the brokerage highlight a moderation in inflow momentum during the quarter, and it has largely maintained its FY27 and FY28 earning estimate as the impact of higher ESOP expenses is expected to be offset by the fair value gains on investment. And management also indicated that only 1 to 2 basis points of TER changes have been passed on by the AMCs, and Although Motilal expect AUM revenue PAT to grow at a CAGR of 24%, 22% and 18% respectively over FY26 to 28. But Motilal believe that the current FY28 PE valuation is of 64 times is stretched, leading to a downgrade. So back of this negative report, this stock is in focus and the stock is down approximately 2%.
Okay, and shifting focus to Tanla platforms then, Ajit, what is the target price on this counter?
This stock, if we look at the monthly and weekly time frame, it is consolidating near 572 to 516. So this is a tight range. So now today, if we look at the chart, it is there is good amount of volume also has been generated. So if it closes here or somewhere around 570 above, somewhere above 570 level, we are looking for upside target of 640 level. 516 must not get invalidated. It is a good support area, and below that, a supply would come into the play. So if it close anywhere above 570, then 640 would be soon tested.
Okay, so that's the view coming in on Tanla platforms, but let's put the spotlight on BCL Industries. The stock is soaring in trade today after the company said that it has completed the commissioning of another 150 KLPD ethanol dedicated brownfield expansion at Bhatinda in Punjab. The plant's distillery capacity will now stand at 550 KLPD at Bhatinda. The company also says that expansion has further reinforced the leading position of BCL as one of the largest grain-based ethanol distilleries in India. So on the back of this commissioning news that has come in, the stock is soaring in trade, up 11.5% as we speak. But earlier in the day, we also spoke to the managing director of the company, Mr. Rajinder Mittal, and he continues to remain very optimistic on demand. He expects 16 to 18% growth in the liquor business going forward. Listen in to what he had to say.
As I mentioned, that the commercial production has started, and we have started the deliveries from this new plant commission, fully stabilized now, operating on 100% capacity. So the things they will be reflected in this second quarter, ending September, and we hope to increase the EBITDA margins as well as the revenue from this plant. The 20 megawatt this full power plant has now been converted on the rice straw fuel, which is one of the cheapest fuel. And with this, our cost of steam as cost of processing will come down drastically, and which should be reflected in the September and the coming quarters. The bottling of the country liquor, we are gaining this momentum, and we are having about 16 to 18% of growth every year. This year we will be, last year we did about close to 2 million cases. This year we have got a target to achieve about 3 million cases.
The word coming in from the management of BCL Industries, the stock is up more than 11% on the back of that commissioning news. But shifting focus to the auto sector then, and JBM Auto, that one is in focus today. Rabinder, tell us, why is the stock in focus?
Well, yes, JBM Auto is in focus in today's session after company has signed a MOU with Driven, which is an electric commercial vehicle leasing platform for supplying 500 ultra-modern electric luxury buses, and this is yet another step by the company toward fostering innovation in green public mobility and decarbonization aligned with the company's net zero 2040 commitment. And under this agreement, JBM EV will deliver 500 electric buses equipped with advanced technology and features designed to provide a comfortable, safe and eco-friendly travel experience for the passenger. And the development of these e-buses has been planned in phases over next 1 year. So back of this development, JBM Auto is in focus and the stock is up more than 1%.
Okay, so that's the view coming in on JBM Auto, but let's also talk about L&T Finance. This counter reported its numbers post-market hours on Friday and turned out to be a strong quarter with broad-based growth across lending segments. Loan book grew by about 27% on a year-on-year basis, and this was driven by robust momentum in the retail portfolio. Urban finance remained the key road driver, while rural business finance sustained healthy traction. Net interest income and operating profit also outpaced loan growth, reflecting strong operating leverage. Profit after tax, meanwhile, rose by a solid 29% on a year-on-year basis, and this was supported by business growth and lower credit costs in the quarter gone by. Credit costs continued to moderate, while net interest margins also moderated on a sequential basis. At one point in time, the stock was up as much as 2%. It has cooled off from the highest point of the day, but despite that, continues to trade with gains of nearly 1.5% in trade today. In fact, earlier in the day, we also spoke to the management, Mr. Sudipta Roy, CEO of the company, who is expecting 25% growth in FY27. Listen in to what he had to say.
Overall, our guidance for the Lakshya sort of 2013 period across 5 years is 20% CAGR, and we remain committed to that. We believe that Q2 of FY27 will be business as usual for gold loans. We continue to deploy our gold loan branches at a good pace, and we are committed to deploying about 500 new gold loan branches this year. We do believe that this will be quite a normal year in spite of the delayed monsoons or a little subpar monsoon because of the fact that the reservoir levels are good.
That's the word coming in from the management of L&T Finance. The stock is up more than 1.5%. But Ajit and Rabinder, thank you for taking your time out and joining us and discussing a whole host of stocks that are in focus today. But shifting focus then, the Adani Group is stepping up its focus on STEM education and scientific research. In partnership with the US-based Center for Excellence in Education, the group has concluded the second edition of the Research Science Initiative, or RSI India, at the Indian Institute of Science in Bengaluru. The 6-week fully funded program brought together by 32 high school students from across the country who worked on advanced research projects under the mentorship of IISc faculty have now modeled on the prestigious MIT Research Science Initiative. The program aims to nurture India's next generation of scientists and innovators. Listen in to an excerpt of this.
This program is basically something which is being done for the high school students. The idea is that high school is when you make your career decisions. And in India, most of the high schoolers want to either do medicine or engineering, and they get stuck into that design because either the peer pressure or parental pressure or their siblings are doing it, that's why they want to do it. However, as in India, we have a very big demand for pure sciences researchers who do pure sciences and do new discovery, new innovations for India. And from that perspective, we really need people who can champion STEM, which is science, technology, engineering, and medicine in India. And this program, idea of this program to have students as young as these guys to come to the program so they can pick up the careers in STEM. So the best way to make them pick up science is to giving them a flavor of science. So this institute gives them a flavor of science, makes them work towards a problem which is interesting, so they can appreciate what it takes to do good science. And using that platform, we want to, inculcate the next generation of researchers in India, and that's the purpose of this program.
And that's all the time we have on this edition of the show. Thanks so much for tuning in. Closing trades will come up next.